All right. Good morning, everybody. Good morning and happy Tuesday. Today is October 24th, 2023. And the big story this morning, holy crap, Bitcoin. Have you seen what that is doing right now? $34,500 for a big BTC. That's just a few moments ago, although who knows at the rate it's changing. It was as high as 35,100 earlier this morning. The price of Bitcoin is up somewhere between 10 and 15% in the last day and a half. Once again, on talk of a Bitcoin spot ETF being approved. Now, for a while, we've been waiting for almost years. We, the Bitcoin community, have been waiting for years for the SEC to approve a spot Bitcoin ETF. Now, the SEC has approved a Bitcoin futures ETF, a derivative of Bitcoin, but it hasn't approved the spot ETF, of course, much to the chagrin of the Bitcoin bros out there. Now, a lot of the, we'll say, the fraud and the collapses and all the not quite above board things going on in crypto certainly hasn't helped with the approval of a spot Bitcoin ETF. And the leading candidate for a spot Bitcoin ETF up until this point, at least, had been Grayscale with the GBTC trust. That's a trust, not an ETF. It's somewhat similar, but there are differences that make a big difference in how it affects the price of Bitcoin. Well, GBTC owned by Grayscale owned by Digital Currency Group. Digital Currency Group certainly has their fair share of legal issues going on right now. They're being sued for fraud by the New York Attorney General. So it's been unclear what's going to happen with the approval of a Bitcoin ETF. Now, last week, there was a unsourced tweet from Coin Telegraph that got circulated very widely on Twitter. It got picked up by Benzinga in their news feed, and Benzinga just blasted it on the airwaves in their news wire. And from there, it got picked up by Reuters and by Bloomberg, and everybody was tweeting, everybody was reporting that a Bitcoin ETF had been approved. Well, that ended up being fake news. The price of Bitcoin rallied over $1,000 and then immediately crashed back down. By the way, Benzinga, who started that by parroting the unsourced Cointelegraph news, that's one of the outlets that told you not to listen to Twitter randos, not to get your investment advice from Twitter randos. If you remember that story, that was Benzinga. Benzinga not taking their own advice, apparently, by blasting out an unsourced tweet from Cointelegraph that ended up being fake news. Well, once again this morning, there's a lot of talk about the Bitcoin ETF, about BlackRock's Bitcoin ETF. But this isn't just rumors. It actually looks like there's some sources to back this up. Now, this is not approval. I just want to stress that. The Bitcoin ETF has not been approved by the SEC, and we still have nothing from the SEC indicating that they intend to approve a Bitcoin ETF. But what we do have is some regulatory filings from BlackRock indicating that they are initially starting to fund this ETF that still hasn't been approved, and that they've registered a ticker symbol with the DTCC, the Depository Trust Clearing Corporation. So BlackRock and iShares, they are taking some of the initial steps toward the release of a Bitcoin ETF. They probably wouldn't be doing that if they didn't think approval was imminent. And so we've got that going on this morning. And then, of course, I'm sure a lot of people are out there trying to front run BlackRock, because I've heard everybody say the second this spot ETF gets approved, people are going to pile into Bitcoin. People are, there's going to be all this institutional buying. Fun fact, I've heard a lot of people talk about how this ETF is going to lead to all this new demand from Bitcoin. I have never met one person who says they intend to buy a spot Bitcoin ETF. Not saying the spot Bitcoin ETF is going to fail. I'm just wondering, why is the spot Bitcoin ETF going to buy all the Bitcoin? You need people to buy the ETF in order for the ETF to buy the Bitcoin. So let me know in the comments, who out there actually intends to buy a BlackRock Bitcoin ETF? I don't know anybody. Maybe some of the institutions intend to do it. People who want price exposure to Bitcoin but don't want to go through the hour it would take them to learn how to actually hold Bitcoin and self-custody it. So that's the big story going on this morning. Now, the other big story going on this morning is Xi Jinping yesterday, or while we were sleeping, he made an unscheduled visit to the PBOC, the People's Bank of China. That's the Chinese Fed. Now, Xi Jinping has, to my knowledge, never visited the PBOC before. If he has, it's been a long time. There's a lot of people are looking into this, reading a lot into this, like this may signal some kind of a policy shift from the central bank in China, because up until this point, the PBOC has not really been offering a lot of help to the Chinese economy. We've had this housing collapse going on, right? With the collapse of Evergrande was well documented on this channel and elsewhere. The collapse of Country Garden is ongoing. By the way, Country Garden still hasn't said anything about their default, non-default, Schrodinger's default, whatever you want to call it. They did default. You can't just silence your way out of paying your bills, but that's a whole story all unto itself. But Xi Jinping visiting the Chinese central bank, my interpretation of that is there is some kind of a monetary policy shift. I don't know how big, but something is going to come out of the PBOC in the next few days. And Xi Jinping wants it to look like it was him that did it. Xi Jinping is very, he's politically, he's a brute. All right. Remember when they had Hu Jintao dragged out of the Chinese Congress, the Communist Party Congress, just as soon as Xi Jinping was basically made God Emperor for life? The first act was for him to have his thugs drag his predecessor out of the room for all the world's press to see. So the fact that he's now visiting the central bank, to me, that Xi Jinping is trying to muscle the central bank into some kind of compliance. And what would the Chinese central bank do? My guess is pump liquidity into the Chinese bond market that right now is foundering. So I suspect we're going to hear something out of the PBOC in the next few weeks, possibly next few days, heck, maybe even today. I don't know. When Xi Jinping says do, people in that country tend to do. Other things going on this morning, we've got the UAW has expanded their strike to include a Stellantis plant where the Dodge Ram 1500 pickup is made. This is another escalation in the ongoing UAW strike against the big three automakers. They still haven't hit that big F-150 plant. But man, are they tiptoeing around that subject. They're getting very close there. Now 40,000 auto workers are on strike at the UAW. And what the heck happened in the bond market yesterday? When I did my live stream yesterday morning, the bond market, the yields were up 7 or 8 basis points. We were pushing 5%. And then at 9:45 a.m. yesterday, Bill Ackman, of all people, tweets out that he covered his bond short, and the bond market flipped and started heading higher. Bond prices started surging higher, and bond yields started crashing. They ended up closing the day down almost 10 basis points on the 10-year yield. Why? Because Bill Ackman said he covered his short. Bill Ackman, who is a well-documented liar and a sleazebag. And apparently, Bill Ackman moves the bond market. Why do people still listen to what that man says after what he did in March of 2020? I don't know, but there it is, and it's news, so we have to cover it. And with that, let's shrink my big melon of a head and see what's going on in the markets this morning. While we shrink my big melon of a head, won't you please hit that like button, folks, and subscribe if you're new here. We do this every morning. The Fear Greed Index is sitting at 29 this morning. That is up slightly from where it was yesterday, but not all that much. We've got the S&P is heading higher ahead of the opening bell, up 22 points, or about 0.5%. We got the Dow is up 168 points, also 0.5% higher ahead of the opening bell. And the NASDAQ is also up 0.5%, currently up 77 points before the open. So stocks are looking good this morning. Looking over at the commodities board, we got gold is selling off for a second day in a row. December gold futures at 1,975. That's down $12 this morning, or 0.6% lower. December silver futures at 23.00. That's down about 20 cents, or 0.9% lower for silver. There's the 22 handle, just came in now. We have got platinum and palladium both down 1%, and West Texas Intermediate crude at 85.51 for December futures. That's essentially unchanged today. Oil was a little bit lower yesterday. Looking at the U.S. dollar, looks like we got a rebound in the Dixie happening this morning. It's been a rough couple of days from the Dixie. It sold off from around 106.7 all the way down into the 105s yesterday. Currently bouncing back up 50 basis points, or 0.5% at 106.04 for the DXY. Now, here's looking at the bond market right now. Yields are modestly higher on the long end of the curve. The 30-year is up almost 1 basis point at 4.99. We've got the 10-year at 4.857. That's up 2 points. The 2-year yielding 5.09, up almost 3 basis points, and the 1 month is unchanged at 5.412. Now, this was the tweet yesterday. This silly one-sentence tweet from Bill Ackman at 9:45 a.m. yesterday. We covered our bond short. He's saying there's too much risk in the world to remain short bonds at current long-term rates. So he's basically forecasting a flight to safety there, and he's saying the economy is slowing faster than recent data suggests. Look, I agree with his last two qualifying statements there that there's too much risk. I agree that the economy is slowing faster than data suggests. Here's my thing. I don't think anybody should care what Bill Ackman says because Bill Ackman is a dirtbag. Bill Ackman, I've mentioned this before on my channel, nobody should pay attention to what this guy says. I'm only covering it because it moved the market yesterday. But I want people to know before you trade, before you do something based on what this dirtbag says, understand, in March of 2020, Bill Ackman went on CNBC at the height of the COVID panic, and he told the world hell is coming and that travel and hotel stocks were going to zero. His words, that those stocks were going to zero. What he didn't say in that interview was that his hedge fund was buying those stocks hand over fist. So he goes on the air and he tells everybody, sell Hilton, sell whatever, sell all the hotel stocks because they're going to zero while he's secretly buying them. And he made billions on that trade. Not prosecuted for insider trading, not prosecuted for securities fraud, which, are you kidding me? That's not securities fraud? Going on TV and stirring up a panic and not telling people you're taking the other side of the trade? How is that not securities fraud? Bill Ackman did not get prosecuted for that. And CNBC, as a testament to the utter and complete lack of credibility that CNBC has, still brings this guy on the air. Anybody who was watching CNBC during that interview that he gave in March of 2020 and sold those stocks, sold at an all-time low to a guy who bought them and made billions of dollars because he scared you on CNBC into selling. So why does anyone in the world listen to Bill Ackman? I still don't understand it. How is he not a pariah? How does anybody at any news station, any TV channel, anybody have this guy on the air after what he pulled? And yet he did. Check out this in the Kobayashi letter this morning talking about it. He said, this is incredible. At 9:45 a.m. Eastern time, this is yesterday, Bill Ackman posted that he covered his bond shorts. 4 hours later, the 10-year note yield is down 15 basis points, on track for his biggest daily drop in 2 weeks. This comes nearly 2 months after he publicly took a large bond short position. Ackman said there's too much risk. He also suggests the data is slowing. Bond markets continue to make history. Here is where Ackman tweets that he covered his bond short, and look at what bond yields did after that. Again, when bond yields are falling, that is bond prices rising. Yesterday, Bill Ackman moved the bond market. Just amazes me. Just amazing. Now, here's the big story this morning, though. Bitcoin surges to 17-month high amid spot Bitcoin ETF progress. Bitcoin is trading at its highest level since May as researchers tip that the highly anticipated spot Bitcoin exchange traded fund from the world's largest asset manager, Blackrock, may be seeded this month. On October 23rd, Scott Johnson, a finance lawyer, flagged that an updated Blackrock filing indicated the firm may move to seed its iShares Bitcoin trust with cash this month. Eric Balkanis, I hope I said that right, senior ETF analyst at Bloomberg, said that filing indicates BlackRock expects to launch the fund in the near future. Seeding an ETF is when initial funding is provided to purchase a few creation units, in this case Bitcoin, in exchange for ETF shares, which can be traded in the open market on day one. Seeding is typically not a lot of money, just enough to get an ETF going, but the fact that they're doing it and disclosing it shows another step in the process of launching. Balkanis also noted that the ETF was also listed in the DTCC, which clears trades executed on the NASDAQ exchange. Again, all part of the process of bringing an ETF to market. Now, this is the price of Bitcoin, and look at what that is doing. This is going back to, well, this is October 16th, Monday, right here. Now, this big candle here, guys, this was that rumor where Coin Telegraph tweeted out that the ETF had been approved. The price rocketed up, and then, of course, it sold right back down. Now, unfortunately, the big takeaway from that was not, hey, guys, we shouldn't FOMO in on Bitcoin ETF rumors. apparently the takeaway was everybody pile into Bitcoin because look how it trades when a Bitcoin ETF gets actually approved, even though it was a fake story. Well, look at what Bitcoin has done ever since. It's just marched higher and higher. It was flirting with 30,000 for a few days. And then yesterday, it just rocketed higher, currently trading at 34,394. It reached a high of 35,143, it looks like, at one point earlier this morning. So Bitcoin's just off its highs at the moment, but really just surging on this rumor. And again, it's not really a rumor, guys. This is a Watcher Guru put this out this morning. This is, I believe, a screenshot from the DTCC website. And I just want to bring it up. It's a little grainy and hard to see, but there it is, ticker IBTC, the iShares Bitcoin ETF. It's officially a thing. And if you think I'm kidding, let's bring this up here on Yahoo Finance, IBTC. There it is, IBTC to USDC. It's currently trading at nothing. It's not actually trading. It's just, there's the ticker, guys. It's out there. So it hasn't been approved yet. It's not actually trading yet, but people are buying, front running it, anticipating a wave of institutional money. But again, who's actually going to buy it, guys? Let me know. Who out there? Is anybody actually plan on buying a Bitcoin spot ETF? Because I'm hearing so much about all the demand about how this Bitcoin ETF is going to buy so many Bitcoin, but who's going to buy the ETF? It's good guess. I don't know. Not me. Xi makes unprecedented central bank visit in sign of focus on the economy. This is one to watch out for. Not necessarily big news yet, but this will be big news, I suspect, within a few days. I think the PBOC is about to do something. I don't know what exactly. Top China leaders visit the PBOC sovereign fund on Tuesday. China battles to boost growth and stabilize financial markets. Xi Jinping made his first known visit to China's central bank since he became president a decade ago, according to people familiar with the matter, underscoring the government's increased focus on shoring up the economy and financial markets. Xi, along with Vice Premier He Lifeng, and other government officials, visited the People's Bank of China and the State Administration of Foreign Exchange in Beijing on Tuesday afternoon, said the people, asking not to be identified, discussing private information. The vice premier also visited the nation's sovereign wealth fund. While details of the visit weren't immediately clear, Xi's movements are closely monitored by investors for potential policy signals. The most powerful Chinese leader since Mao Zedong has never appeared at the PBOC, according to public records, and his visit would highlight recent Communist Party rhetoric on its centralized and unified leadership over the financial industry. Previous such inspections were often led by the nation's premiers or their deputies. So my interpretation of this story, again, there's no detail whatsoever about what is actually being spoken about at this meeting. But my guess is, based on what I've seen with Xi's behavior in the past, is there is going to be some kind of a policy shift. How big and in what direction, I don't know. But Xi Jinping wants his name attached to it when it comes out. Now, if I had to guess, I would say that's probably going to be some kind of major steps to inject liquidity into the country's bond market, because there have been massive amounts of defaults in the Chinese bond market. The Chinese housing market is not recovering. The buyers are not coming back to the Chinese housing market. The sales are way down. The developers are dropping like flies. The big ones are dropping like flies: Evergrande, Country Garden, Kaisa. So the central bank, my guess is they're going to come in and they're going to start buying up all these developer bonds to get the cash moving again in the Chinese housing market. Whether or not it works remains to be seen. And last one I want to talk about today, UAW adds Stellantis Ram 1500 plant to strike. 6,800 more workers join the pickets, and the Michigan company is outraged. Oh no, they sound pretty mad. They're outraged. Well, call off the strike. I didn't realize anybody would get outraged. You got to love the outrage. Stellantis' response: the UAW has decided to cause further harm to the entire automotive industry, as well as our local, state, and national economies. The UAW on Monday ordered 6,800 members to strike at Stellantis' largest assembly plant, halting output of the automaker's profitable Ram 1500 pickup. Stellantis has the worst proposal on the table regarding wage progression, temporary worker pay, and conversion to full-time, cost of living adjustments, and more, the union said in a statement. The Sterling Heights assembly plant north of Detroit is Stellantis' only source of the current generation Ram 1500. So this one's going to hurt. The abrupt move is the UAW's first expansion of the strike since October 11th, when it added Ford's Kentucky truck plant. The plant builds Super Duty pickups as well as the Ford Expedition and Lincoln Navigator large SUVs. More than 40,000 UAW workers are now on strike. So no end in sight to the UAW strike. It's been a couple of weeks since we heard anything about this, and it looks like they're stepping up the pressure on the companies now. That 1,500 plant, that's going to hurt. That's definitely the Dodge Ram pickup. That's one of their better selling vehicles. I'm telling you, though, the nuclear option in this whole deal is the F-150. If the UAW starts targeting the F-150 pickup, that means things are really going downhill fast. So keep an eye on that story, and we will bring you the details as they come out. And I have a few thank yous I have to say this morning. Thank you, Mike Kathman. Says, just thought Bitcoin was an alternate currency with no Fed or government intervention. You know, that was always the idea behind Bitcoin. I don't think Satoshi, whoever he, she, they were, I don't think they ever, while they were writing the white paper saying, gee, I hope one day the world's largest asset manager creates an ETF to track the price of this thing. Probably not what they were really hoping for, right? Bitcoin was created as a protest to what was going on with the debasement of currency and central bank money printing and the moral hazard in the establishment financial system. So I'm not celebrating this. You guys know me. I like Bitcoin. I own Bitcoin. I buy a little bit every week on a regular basis, regardless of price movement. It's a long-term trade. But I have a hard time getting excited about the prospects of a Bitcoin ETF. Sure, there might be a short-term surge in the price, but if this ETF really does take off, it just means BlackRock is going to have control over the spot price of Bitcoin. They'll use the ETF to move for the tail to wag the dog. That is assuming anybody actually buys it. Again, I don't know anybody that actually intends to buy it. I have zero intention of ever buying a Bitcoin ETF. So, yes, it was viewed as an alternate currency with no Fed or government intervention. BlackRock is not necessarily Fed or government intervention, although at this point, BlackRock, Federal Reserve, U.S. government, Democrat, Republican, Uniparty, it's all they with a capital T to me. I really don't make any I don't distinguish at all between they whatsoever. They all just representatives, different faces of the same coin. So thank you, Mike Kathman. I appreciate the super chat and support of the channel, sir. And thank you, Kevin DeBella. Says, I'm still unclear the significance of the reverse repo running out. And is it all cash or is it cash and bonds? So Kevin, reverse repo is the extra money. All right. It's the money that currently has nowhere to go. What happens with reverse repo is I've got all this cash at my bank. I don't want to buy U.S. government bonds. I don't want to make loans because they're risky right now. What do I do with it? The Fed has said, hey, guys, you can send it to us. Give us this cash. We'll borrow it from you at 5% interest. And here, I'll give you a U.S. Treasury as collateral. It's a reverse repo, right? A repo is when you loan collateral to the Federal Reserve in exchange for cash. A reverse repo is the opposite, when you borrow cash in exchange for a bond. Now, I'm sorry, when you loan the Fed cash in exchange for a bond. The significance is that's the extra money. That's money. They created that so people stopped buying U.S. Treasuries and sending interest rates lower because they thought that was causing inflation, the low interest rates. So the fact that the reverse repo is dropping so quickly means the extra money is running out. And when there no longer is any extra money to run out, when the bond market needs cash, it's got nowhere else to go. Right now, if interest rates rise, the bond money flows out of the reverse repo and into the bond market. Well, when the reverse repo is empty, there will be no cushion to absorb that shock. There will be no extra money to come in and buy up the treasuries that the government is issuing. So interest rates will rise further. So the significance is a shortage of dollars and a spike in interest rates. And currently we're on pace to have that sometime around February of next year. So it is all cash. It's cash trading for bonds. I hope I explained that to you, Kevin. Just know when it runs out, interest rates go higher unless the Fed does something. And that's the asterisk, unless the Fed does something. Maybe that's why people are betting on the pivot, because they believe the Fed will do something. My gut tells me they have to get rid of Jerome Powell first. If the reverse repo runs out and they fire Powell or Powell abruptly resigns, that means the money printer is coming back on. That's just my opinion. Thank you very much, Kevin, for the super chat and the support of the channel. And thank you very much, Jesse B, who says, outraged. Like, thank God we can stop production and blame it on the strike. Outraged, local Ram dealerships are packed of Ram trucks. That's right. They have to feign outrage. They have to keep the fight going in the press. But really what it is a way to further limit supply of trucks, isn't it? So what is the strike really going to do? The strike is going to drive up the shortage of vehicles. It's going to prolong it because fewer vehicles being produced means a shortage of vehicles, right? Well, if demand stays the same, which right now demand isn't staying the same, it's lowering. So what the strike is really doing is it's offsetting a collapse in demand for new vehicles, isn't it? Because there's fewer vehicles being produced. And so you still have enough vehicles on the lot to satisfy all the buyers instead of this big surcharge, this big excess of vehicles, which, you know, what you're saying here, local Ram dealerships are packed of Ram trucks. Maybe it's a good thing then that this strike is happening. It's a good thing that more Rams aren't being built at the moment because there's nobody to buy them. Why? Because, you know, the F-150 and the Dodge Ram, those used to be like the poor working man's truck, right? Now, geez, you need to be making high six figures to afford a brand new F-150 or a brand new Dodge Ram pickup. What do those things cost? Fully loaded, $75,000, $80,000 for one of these things? It's not a poor man's vehicle anymore, that's for sure. And I'm sure the automakers like it. You know, their profits are up, their expenses are basically the same. And the UAW wants a cut of that. And you better believe the Federal Reserve is paying attention to what comes out of these strikes, guys, because they don't want to see wages rising. Thank you very much, Jesse B. Appreciate the super chat and the support of the channel. And thank you, everybody, for spending your morning with us here on the Morning Update Live. Just want to say thank you very much to my Patreon supporters for everything you guys do for the channel. Link down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Until next time, live small and dream big.